You're with NewsHour. Bloomberg's Jessica Summers now joins us from New York with the latest on the U.S. markets. Jessica, good day. So U.S. President Donald Trump is preparing to target more technology firms in its trade war with China.
Thanks, Devin. Yes, that is exactly right here, and it really does have investors on edge. Essentially, U.S. President Donald Trump is considering basically blacklisting up to 5 Chinese surveillance firms. Now, that is according to our Bloomberg sources here, and it is quite worrisome among investors. Essentially, those restrictions imposed would be similar to the ones imposed upon Huawei Technologies, where it would limit these firms to access to U.S. markets and to American suppliers. So this is really just the latest development, the latest move by Trump in the U.S.-China trade war. I also want to point out that we did have China's foreign minister come out and say that China is, it has its doors open. It's willing to negotiate if the U.S. is willing to negotiate, but it will fight until the end if the U.S. opts for extreme pressure.
All right, so back home we've got an interest rate announcement of our own tomorrow, but I see the Federal Reserve, your central bank, releasing minutes of its market committee policy meeting this afternoon. How did the market digest that?
Well, the market pretty much just clung to losses. We kind of got what we were expecting. Essentially, the Federal Reserve left its benchmark policy rate unchanged in a 2.25% to 2.5% target range there. We had Chairman Powell speak out after saying that there's really not a strong reason to move interest rates in either direction. So Fed officials really signaling that they're sort of continuing this more patient approach to interest rate moves for some time into the future. In terms of inflation, we had many Fed officials sort of side with Chairman Powell's view that this recent dip will be only temporary. And then again, in terms of market reaction, we saw those equities cling to losses. Essentially, equities were dragged down lower today because of the latest developments in the U.S.-China trade war, with tech shares under a lot of pressure compared to other sectors. We had the S&P 500 index, the Dow Jones, and the NASDAQ all off by as much as 0.5% today.
And then lastly, Jessica, we've seen some wide-ranging jumps from up and down here with the oil price this month. Brent crude prices tumbling today, and it's got to do with this U.S. data showing that there is quite a good supply on the inventory side. Yeah, that pushed the oil price down, I see.
That's really what it does have to do with, Devin. You are exactly right. Brent tumbled by the most in 3 weeks on an intraday basis today. WTI also declining, both benchmarks closing in the red today. And that is after we received the U.S. weekly inventory report showing that domestic crude stockpiles rose to the highest level since July 2017. Gasoline stockpiles edged up by more than 3 million barrels. Now that is the biggest build since January. Distillate stockpiles also increased. So essentially we're seeing these supply rises across the board in terms of different products here in the United States, and it's really causing fear among investors that we may sort of start to see an oversupply situation that will pressure crude prices lower. I also do want to point out that this ongoing U.S.-China trade war, of course, is also acting as a downward force on crude prices.
Jessica Summers in New York, thanks very much indeed for that update.